I am currently managing over $1.2 million in funded capital. In this video, guys, I will show you exactly how I go about managing 7 figures in funded capital and 7 figures in prop firm evaluations in 2026. I'm also going to show you the risk parameters and other tips and tricks on how you can consistently get funded and make sure you don't blow these funded accounts, as well as building more backup accounts that you can always fall back into once a funded account ends up being blown. Okay, so first of all, guys, risk parameters. When it comes to risking per trade, the way I look at it is percentage risk per trade. So what I usually do, so the biggest size accounts like a 200k, a 300k account will always risk small percentage because they're more expensive and you want to take them a bit more seriously. So 0.5%, 0.25% risk per trade. In evaluation phase, I might do slightly higher, like 0.6%, 0.75% per trade risk. When I get funded, I reduce the risk exponentially because the goal isn't to make quick bucks on getting funded and then making a big payout and then losing the account, because realistically most people will end up blowing their funded account, and that's pure mathematics. Because if you think about it, most trading strategies have a max drawdown of like 10 to 15%. So if you risk 1% per trade, 10 to 15 losses in, you will blow the account. So you have to adjust your risk accordingly. That's why I risk like 0.5%, because now even a worst case scenario where I'm in a 15% drawdown overall for a funded account with half a risk, that's only going to be 7.5%, which means it's recoverable. In terms of my trading stats, I have a 65% win rate and my risk to reward is around 1 to 1. After spreads and slippage, that comes down to around 0.94, 0.93 R. So technically my risk to reward is just 1. I risk 1% to make 1%. In a single month, I average around 8 to 12 trades. The way I see it, a missed trade opportunity costs you nothing, but failing an evaluation that you made a lot of progress on or failing a funded account costs you way more time. That's why sitting on your hand and having patience is so important in trading, because it's absolutely fine if you miss a trade or if you don't trade on a certain date. There's no need to force trades. A very important mindset tip when it comes to trading is I always use pending orders. I never use market orders. So I don't really need a trade copier. What I can do is I always place a pending order. This way I don't need to react in real time on the charts. I do my analysis, I follow my checklist of all the rules for my strategy. Once that's met, I have my A+ setup, I place a pending order, and then I leave the charts for a whole day. I come back the next day and see what's happened. My pending order will have a TP and stop loss already in place. That removes so much more thinking and potential human errors that you can make if you're entering market orders. Another recommendation I would like to give every single one of you watching this video is don't allocate all your capital in one single firm. Diversify across as many firms as you can. Pick the top ones: Funding Pips, Funded Next, FTMO, Alpha Capital Group, all these top firms, because they're unregulated. You don't want to have all your capital in one, funded in one, and then that firm goes bankrupt, or because they're unregulated, right? They can just deny you payout, ban you, and now you're sitting there on your hands doing nothing. You have nothing, no income, no cash flow. That's happened to me personally before. I've lost 600k with the funded trader and 600k with my forex funds a few years ago. That was $1.2 million in funding that I lost just like that. So that's why I recommend you diversify across multiple firms. At the end of the day, guys, prop firms are not the end goal. They're just a tool. Use prop firms to build the cash flow and have as much capital as you can, and then invest the capital in other businesses as well as building your personal account, because the personal account is all your money. If you have a strategy and a system in place, you can always rely on a personal account to make you money. You can build a track record and then have potential investors invest in you. Let me know in the comments below if you found this video useful, guys, and do let me know what else I should be talking about in the next videos.